Thanks for checking out another clip of the Cashflow Contractor. We'd love to have you as a part of our audience. Click subscribe wherever you get your podcast.
Matching is the principle of...
Well, what's the non-negotiable? Give me, like, you must match, or what is it?
You need to record expenses and revenue you need to record revenue and expenses in the same period. The expenses that are used to generate the revenue need to appear in the same period as the revenue itself.
Can you give me an example of when someone doesn't do this? Or
100%. I start working on my project. I haven't received any money, but I know it's coming. I got a contract. I got a free skid steer. I'm out there digging a pad on my building. I'm paying for the mob. I'm paying for the guy, paying for the skid steer. I'm paying for the materials. I'm going to stake out the pad, all this stuff. So I got expense.
Right.
That goes in February. I don't even invoice until the end of March. So that whole time that the expense is accumulating and showing a loss, but it's not really a loss. It's just I haven't billed it yet, right?
Right.
So matching is, how do you get them both in the same period? Okay. So some simple things you can do is, like, if you're going to invoice on the 1st of the month and you did all the work last month, go ahead and date the invoice the 31st. That'll put them in the same month. And then the invoice for the profit, the money coming in, will be in the same month as the money going out, and you'll know for that month if you made a profit or not.
Okay.
Now,
And obviously, I'm sure there's circumstances where you can't avoid this or avoid the delay of the invoice, but wouldn't the best practice just be to invoice faster or sooner? Real-time invoicing. Okay.
Yeah, you can. That's one thing you can do, is invoice work to date on the last day of every month. Now, some customers are going, I don't want to get 25 freaking invoices from you. And you can say, well, you don't have to pay them till this day, but I'm going to
invoice them, but I'm going
to invoice them for matching. That's one thing.
Okay.
But this is a great segue to the next one. So
matching
is you have to get the income in the same period as the expenses incurred in generating that income.
So the non-negotiable is you must match for the same period? Or what did we just say?
Matching means for the same period.
So you must match, I guess, is matching is a must. Is okay. Right. So you must match, and what's the problem that solves?
Rollercoaster profits.
Rollercoaster profits. Now you're speaking the language that everybody understands.
Down, 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 up, 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 down, down, down. And then it gets that's one job. You got 10 jobs going. Every one of them's in some phase of up and down. And so you have, we're up, we made $300,000 last month.
Yeah.
We've never even sold that much before. Oops, we lost 275 the next month. Or, try. And that's one of the major reasons that people I work with don't look at their books. They go, it's meaningless. And it is meaningless.
Because it's inaccurate information.
Eventually, when you close out a whole year, plus or minus the strays that you have at the beginning and end, it's going to be pretty accurate because all that stuff is washed out. But matching is, can I cuss on this thing? Matching is a bitch. Right? It is hard. We can put stars over that if that's too rogue for us. And that's why
it'll be in the teaser. It'll be the first thing you say. Matching is a bitch.
That works for me, because it is. When I was writing about it, trying to say, okay, I'm going to advise people how to do this and teach them, and I realized I can't do that. I have, like you said, what if you can't? What if it's not just one day back? And then how do you handle it if you got 6 invoices and just going, you know what? I'm going to advise people, don't freaking do it. Get a skilled accountant to do it for you.
Yeah.
Okay. And then this segues right into the next one.
Yep. What's the next one? Number 8.
And the next one is WIP, which WIP, work in process.
Okay.
And it is the official resolution to the matching process. Okay.
Yeah.
It takes each job and it says, hey, I've done work in excess of billing. In other words, I've done more work, incurred more expense than I billed for. And maybe on the next job, I billed for more revenue than I've done work. Mm-hmm. And WIP is a process that good accountants can do. Every bonding company needs it, so it's out there being done. but good accountants can do, and they correct for that. They get the excess billing and the excess, meaning you build too much because you haven't done that much work yet, and the excess cost, which means I've incurred costs I haven't billed for, and it works them out and gets a net number and puts it into your income statement and corrects for that. So you're able to just make entries the way you normally would, but there will be an entry that looks at all of those and says, too much, too little, too much, too much, too much, too little, little, net difference, and makes your books right.
Okay, so, and I understand this one before this, but essentially the non-negotiable is track WIP religiously.
Yes.
And the problem that it solves is that it helps you avoid doing more work than you've billed for, or billing for more work than you've done.
No.
And it syncs your billing with your production. I'm going to stop there and talk.
Well, it doesn't prevent you from billing. I mean, it doesn't prevent you from doing that.
No, I'm not saying it prevents it.
You get a $30,000 deposit. That's great. But that's $30,000 in excess of work done because you haven't done anything. Or you go out there and do $30,000 of work before you invoice anybody. And that's $30,000 of work done. Hey, it could be a different job, but on whole, the two wash out.
Yeah.
Which never happens, but I mean, it could. But it's a complex deal. It's a very useful deal. It's been around forever. Every bonding company makes people do that.
Yeah.
Banks that are dealing with big,
yeah,
they want to know that too. The thing is, I've never I could do it, but I would have a hard time. I mean, I understand the principles. I understand how it's done, but it's also how it works with QuickBooks. An accountant or a very highly skilled bookkeeper needs to do that.
Yeah.
So
and you need I think it's because there's two parts of the equation. There's the accounting side and there's the project management production side, whatever you want to call it.
Right.
And they have to sync.
Cash flow and profit. Yeah.
Yeah. They have to sync. And so I think what WIP, the non-negotiable is track WIP religiously. It's what it does is it clarifies and balances billing and production. Is how I would think about it, or accounting and production, whatever you want to call it.
Yeah, accounting and production.
Yeah.
It'll account for overpayments and overwork.
Yeah. So it clarifies and it balances the two and it syncs them.
Right. It makes your books correct.
But, and this is where, like, on the production side, and this is more of my territory, right? This is why you do daily logs. This is why you have milestones on a project when you do planning. This is, that's the whole reason why you have to be organized on a project and have clear planning process so that you can sync the two. Because otherwise, if you don't have status updates on the production side, you can never do WIP.
Right. And that's too much. They have a way of trying to avoid opinion, right?
Yeah.
Like project managers were half done. They can do it as cost. They can say, well, our cost is going to be 60% of this project, and we've done, X thousands of dollars. Then they'll gross it up and say, this is how much we could have billed if we were billing.
Right.
But anyway, it's a complex process. I gave up in my first book, not because I think people are stupid, but I thought, no, we shouldn't be doing this. But you need to know what it is, and you need to know why it's important. And if you're doing a lot of jobs and you're doing jobs that extend like 6 months and things like that, if you don't have it, I don't think you can ever point to a time anywhere that your books were accurate. Maybe 6 months after the year end, you could, when you're summing up for taxes. So anyway, that's WIP.
Thanks for checking out a clip from the Cashflow Contractor. We have full episodes where we go deep on topics that help you grow a construction business that runs without you so you can have less stress, more time, more money. Now, we've got other videos, other clips, but if you want to check out the full episode for this clip, you can click wherever our editor put it. It might be here, might be there, might be over my face, I don't know. But thank you for checking us out. We'd love to have you as a part of our audience. So subscribe or check out a full episode wherever you get podcasts.